Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak, your podcast. Good morning, it's Thursday the 23rd of October. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, oil prices jump as the United States and EU ramp up sanctions on Russian producers in a push for Ukraine peace talks.
Elon Musk hijacks Tesla's dismal earnings call to plead for a $1 trillion pay package.
Plus, China's AI push in Africa, how Deepseek is gaining ground among startups and innovation hubs across the continent.
Let's start with a roundup of our top stories.
The United States is sanctioning Russia's oil giants Rosneft and Lukoil in a major U-turn for US President Donald Trump as he seeks to pressure Vladimir Putin to negotiate an end to the war in Ukraine. Oil prices immediately spiked in response to the sanctions, with Brent advancing as much as 3% to trade above $64 a barrel. Trump told reporters the peace process had dragged on.
We cancelled the meeting with President Putin. It didn't feel right to me. It didn't feel like we were going to get to the place we have to get, so I cancelled it, but we'll do it in the future.
Mr. President, can you tell us a little bit about why you're elevating sanctions against Russia right now?
I just felt it was time. We've waited a long time. I thought that we'd go long before the Middle East.
The shift in policy signals the US president is running out of patience with the Russian leader, but it's a gamble given Trump's focus on keeping domestic gasoline prices low in the US. But foreign policy analysts warn Russia has historically been very good at evading these kinds of sanctions. Refiners in India, which along with China are the biggest buyers of Russian crude, have told Bloomberg the latest sanctions will mean flows from Russia to them are expected to fall to near zero.
Meanwhile, EU countries are preparing to tighten their sanctions on Russian energy after agreeing on their 19th package against Moscow. The measures will be automatically adopted this morning, barring any objections, by EU leaders arriving in Brussels. The package targets 45 entities that have helped Moscow evade sanctions, including 12 companies in China and Hong Kong. It will also include an import ban on Russian LNG, tighten sanction bans on two major Russian oil companies, and also target over 100 additional shadow fleet vessels. Ireland's Europe Minister Thomas Byrne has told Bloomberg Radio the EU must use its power to support Ukraine.
It is really, really important that the European Union continue to use its leverage, continue to use its unity, and indeed our power and our financial wherewithal to support Ukraine in what they're doing, which is defending themselves and legitimately under international law, making sure that they are keeping themselves alive as an independent country, which they are entitled to do.
Irish European Affairs Minister Thomas Byrne speaking there ahead of the EU leaders gathering. One of the more controversial points on their agenda includes allowing the use of frozen Russian assets to provide loans to Ukraine.
US Treasury Secretary Scott Bessent says everything is on the table when it comes to possible tech sanctions on China. The top White House official was asked if America might consider similar measures to those it has just imposed on Russia. He told reporters the world has to retaliate against China's policies on rare earth metals.
I will confirm that everything's on the table, that we are going into the negotiations with good intentions, with great respect. The Chinese have put these rare earth export controls not only in the U.S. but on the whole world. And if these export control, whether it's software, engines, or other things happen, it will likely be in coordination with our G7 allies.
Bessent is one of the key negotiators in the US-China talks. The American and Chinese presidents are due to meet next week as trade tensions keep ramping up.
Elon Musk is calling on Tesla investors to support his $1 trillion pay package. The billionaire CEO used the company's earnings call to criticise the power of shareholder advisory firms who have criticised the plan.
Like I said, I just don't feel comfortable building a robot army here and then being ousted because of some asinine recommendations from ISS and Glass Lewis who have no freaking clue. I mean, those guys are corporate terrorists.
Elon Musk speaking there as on Tesla's call. His pitch came as the electric vehicle maker reported a 40% plunge in operating profit as rising costs undercut a record quarter of vehicle sales. Customers had rushed to buy Teslas before a US government tax credit expired at the end of September.
To other earnings news, SAP's cloud third quarter revenue has missed estimates, citing what it describes as an uncertain economic backdrop. Europe's most valuable software company reported almost 5.3 billion euros in the period on an adjusted basis. That's slightly below expectations. The news comes after cloud sales CEO Christian Klein pivoted the company away from selling traditional software licenses to subscription services. The company's American depository receipts slid about 4% in late trading after the results were released.
Now to the UK, which is planning a package of emergency measures to boost house building in the capital. Bloomberg has learned that the government's planning to cut the proportion of affordable homes that developers have to provide from 35% currently down to 20%. When asked, spokespeople said that the plans are not yet finalised but will give the mayor stronger levers to bring thousands of homes forward more quickly. Here is Bloomberg's Freddie Fulston with more.
Stifling regulation, planning delays and stringent requirements for affordable homes. Just a few of the problems the Mayor of London and the UK's Housing Secretary are looking to relieve. Measures to boost development will look at fast-tracking planning and loosening housing design rules. One proposal sees a reduction in the number of affordable homes that providers have to build. It's a tantalising prospect for a paralysed planning system, but the government has a way to go if it wants to build 1.5 million new homes this Parliament. One forecast by Molly Orr London says that at the current rate, just 15 to 20,000 homes will be in active construction in London by the start of 2027. In London, Freddie Fulston, Bloomberg Radio.
So those are our top stories for you this morning. Now, in terms of the markets, oil right now jumping 3.3% higher for Brent crude futures at $64.66 the barrel on the sanctions news from the US. Asian stocks declining. The MSCI Asia Pacific Index down 0.6%. So we're far from the record high that we saw on Monday. Gold has also stumbled this week. Gold currently down 0.1% at $4,092. The Nasdaq yesterday lost 1%. Stock futures for the US are in the green. For the Euro Stoxx 50 futures in the red, down about 0.1%. Two bits of breaking news. Nokia adjusted operating profit coming in a beat versus analyst estimates. And an interesting announcement from Airbus, Leonardo and Thales signing a memorandum of understanding for space and satellite projects. So this expected to have an annual revenue of €6.5 billion. So that announcement coming out this morning.
In a moment, more on the US moves to sanction Russian oil, plus how China's AI model Deepseek is being heavily promoted to startups in Africa. But another story that we've been reading this morning on the rise of the wine bar in London and New York. Now, I don't want to claim credit for this, Caroline, but I've had this conversation with our food editor, Kate Crater, on many occasions, how you can't move for wine bars in London, and that I think she and I had a very long list of places that we didn't get to try before I moved away. So there's definitely lots of great recommendations in her piece. But it's an interesting, I suppose, trying to explain why these small venues that have limited menus are doing so well in places like London and New York. Partly cost is the issue, is that, you know, running a restaurant is extremely expensive, and if you're able to do it with a smaller menu and in a smaller venue too, that's something that can really, really help to make it work. Now, I would say that these are obviously things that are omnipresent in cities like Brussels, where I am, or in Paris, where I lived previously as well. It's a model that's been tried and tested. So it's interesting to see, I suppose, its rise in popularity in other parts of the world as well.
Oh, it's just lovely to feel like a cool girl, because one of the places that I went to have lunch at very recently was on Kate Crater's list. So I thought, woohoo, I have stumbled across one of these popular names. But yes, she cites in London Marjorie's, Cadet and Hector's as the sorts of places, you know, which have, as you say, often very unusual wine lists as well, she points out, is a kind of a trend. But yes, part of it is also that then the whole idea is that you make a meal into a kind of party and it can go on forever.
Well, exactly, which nice. I think is talks about it being a dangerous occupation, which I can identify with. Lots of great recommendations in Kate Crater's piece. We'll put a link to it in our podcast show notes. Well, let's bring you more now on our top story this morning. For the first time since returning to the White House, President Trump is rolling out sanctions against Russia's two largest oil producers, going to the heart of the country's war economy. But the impact may be limited in the near term. We've certainly seen markets reacting to the news today, though. Let's bring in Tony Halpin, who leads our team covering Russia, for more. Tony, this is quite a U-turn by Donald Trump. How much will these sanctions impact Russia versus spooking the global oil markets?
Yes, good morning. Well, I mean, these are certainly, the two largest oil producers, as you've mentioned. They account for nearly half of Russia's exports, and taxes that Russia gets from oil and gas is something like a quarter of the federal budget. So potentially the impact is very large on Russia and its ability to fund the war, given that they're already struggling with a growing budget deficit because of the amount of money consumed by the military. But as you've noted, it's a slow-burning impact. The order gives, I think, until November 21st to unwind some of these agreements, and traders are going to be wanting to see whether or not the US is going to follow up on this, or whether famously President Trump makes another zigzag and changes policy before they really begin to bite.
How do you think that Putin will react, and what does it mean, therefore, for the war in Ukraine?
Well, Putin has really resisted changing policy under the pressure of any sanctions, and so publicly at least he will say that this will make no difference. But privately, the Kremlin is clearly going to be very concerned about the impact on revenues, on its ability not only to fund the war but to support the economy in Russia and to prevent the kind of discontent that would threaten their ability to continue waging war. So yes, they're going to be watching this very carefully. They're already struggling, as I said, to balance the budget, and this is not going to make that any easier.
The place of China and India in all of this are interesting too. They're the big buyers of Russian crude oil. Now, they're not being sanctioned directly, but we're already hearing from Indian refiners that they'll essentially have their supplies reduced to zero. How far-reaching can we see these sanctions as being?
Well, these are the two big test cases, really. India gets about a third of its oil now from Russia, and before the war, it was a very small purchaser. And something like a fifth of Chinese crude comes from Russia as well. But the question you've raised is the key point, whether or not these countries really consider that they'd be the target of secondary sanctions. And in the case of China, for example, the US is trying to do a trade deal. President Trump and President Xi Jinping are expected to meet soon. So whether or not the US would really impose secondary sanctions to deter Chinese purchases is an open question. As you've noted, though, India feels that they're going to start moving away from Russian oil, and that's going to have a big effect on Russian income.
We do also have to layer into this, though, the EU with this 19th package of new sanctions that's expected to go through today. How much more incremental pressure will this bring?
Well, it's targeting particularly an import ban on liquefied natural gas, which is something that Russia's been turning to in order to increase its revenues. That's going to come in from January 2027. And it's also targeting entities that help Russia evade the current sanctions. So it's a tightening of the screws, as you say. It makes life still more difficult for Russia. It will gradually raise the pressure. But of course, Ukraine is facing immediate pressure every day from Russian military action. So in some ways, it's a race against time as to which one has the bigger impact in order to bring Russia to the table to negotiate and enter this war.
OK, Tony, great to have you with us. Thanks for your analysis this morning. Tony Halpin leading our team covering Russia. Stay with us. More from Bloomberg Daybreak Europe coming up after this.
Huawei is promoting the Chinese AI model Deepseek to African startups and innovation hubs, offering it as a cheaper alternative to American firms like OpenAI. It's a long-term bid for customers, for soft power and for the vast troves of data that will shape the future of artificial intelligence. And our senior reporter covering technology in Africa, Lonnie Prinsloo, is in our London studio to tell us more. Good morning. Very good to speak to you. How is Huawei promoting Deepseek then in Africa?
Okay, so earlier this year, they were in Kenya sitting with a bunch of startup CTOs, and this Huawei executive came up and immediately started talking about Deepseek. And he basically says, Deepseek is so hot, no one wants to talk about anything else. And that is, of course, true. So that executive then started pitching to this group of African startups, and the room was immediately alive and interested in what he was saying. So, yeah. So I think there's definitely a lot of interest in what Deepseek can offer startups in Africa.
How does the reception that Deepseek's getting compared to, I suppose, the use of other AI models? We talk about OpenAI and others.
So AI, everyone's quite excited about it, whether it comes from the East or the West. The thing is, in Africa, it's quite price sensitive if you want to customize and you want to train these models. And of course, Deepseek is also open source, which we haven't seen a lot with Western models. So you can customize your AI model, whether it be a small language model or a large language model. So that's really the attraction for a lot of these startup CEOs and founders. So it's taken off. It's definitely surged in terms of what people are using when it comes to startup founders on the continent.
Okay, so there's a lot of interest, but are there concerns about the push by Deepseek? Because you've been reporting on that too.
Yeah, so they are critics, and people are worried that Deepseek admits that if the data is stored in China, according to Chinese laws, it can be accessed.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.